Hello everyone and welcome to Crypto Ripto. I'm Christian and in today's video we're looking at what to know when investing in crypto. Now I know a lot of you know all the meme, shite, super coins, even the cool altcoins in the top 50 in market cap. But do you know how the institutions and the smart money and the investors out there look at the different aspects of crypto? How they look at Bitcoin in the crypto space, how they look at altcoins in the crypto space, how they look at just different aspects of applications and also the decentralized exchanges. Well, in this video, I'm going to go through a presentation and tell you how you can split your classes of crypto investing to get the best possible potential in high risk, high rewards, slow rewards, slow risk, and all that cool jazz. So if you want to know that, stay tuned and let's get into the video. So obviously before I start today's video, you've guessed it, anything you see, hear or choose to ignore is not financial advice, especially with this deep dive investing information. So with that being said, I'm going to jump straight into the presentation and give you my views and the views of Michael Saylor, that you know, one of the biggest Bitcoin investors out there. After researching into what he looks at, how he sees it and putting my own bits together, this is how the crypto market and asset classes and applications are broken up. So it is a pretty cool watch, this one. So if you don't watch any of my videos, then please do watch this one. But before this, hit that like button, smash that subscribe button, tickle that bell notification, and let's get straight into that presentation. What's good to know when investing in crypto? Well, I've put an overview together to try and help you understand what it is the different areas of crypto are before you dive in. So the overview. Most cryptocurrencies are not cryptocurrencies at all. Cryptocurrency is a misnomer, and this is causing a lot of confusion in the crypto market. So number one, I think digital property. Bitcoin is the king of this. It is optimized for integrity and durability over long periods. The idea is that you want to buy Bitcoin and hold it for 100 years or however long you want. But imagine buying land in London. Would you ever sell it? Probably not. You and your family would keep hold of it. And here is why I think. You could live off that land, but also you could generate a yield on it through renting out the ideal person to build on it, and then you charge them ground rent. Or you could borrow against it. And if you're a smart, savvy landlord, you could do this forever. Number two are digital currencies like Tether, USDC, Circle and maybe Diem are seeking to be the stable currency to serve nearly 8 billion people that would need a currency. Now the currency is a medium of exchange, it's not a store of value. Number three are digital platforms. They are things like Ethereum, Polkadot and Cardano. These are platforms for creating applications like decentralized exchanges, insurance companies, NFTs, etc. So when you buy these, you are buying an actual token, an asset in it, which gives you or a share of the digital platform. Number four are the decentralized applications like Uniswap, SushiSwap, PancakeSwap. You sort of get the idea. They're trying to replace things like the Nasdaq, Coinbase, Binance, anything centralized really. And also Binance Smart Chain even wants to replace the Binance exchange. How does all this look in the crypto and DeFi world? Well, let me break it down for you. I could give you 1 billion's worth of land in London, or two, I could give you a billion's worth of British pounds. 3, I could give you a billion's worth of buildings, and 4, a billion's worth of companies in them buildings. And this is how it'd break down in the crypto world. The digital property would be Bitcoin. Land is stable and an up and comer. Digital currency would be the British pound, obviously a currency for a currency. And we have things like this in the crypto world with the USDC, USDT, etc. Digital platforms would be the buildings. Now these are the ones that the exchanges and stuff are built on. So they're things like Ethereum, Polkadot, Cardano, etc. And you've got the decentralized applications. These are companies, things like SushiSwap, Uniswap, PancakeSwap, etc. So this gives you a breakdown of how the real world connects with the digital world. So what's the upside and downside of the risk to this? Well, the land would be here for the longest, maybe 500 plus years. So we class this as Bitcoin in the crypto world. It has high ups and little risk. The currencies, however, they have to be compliant and compatible, and they're average over 35 years. With low upside, high regulatory risk, I don't see any benefit in holding these other than to buy the dips and get in and out and stake. Buildings are useful life of 50 to 100 years. So this is medium upside and medium risk. So this is your platforms. You know, the things like Ethereum, Polkadot and Cardano. Then you have your Wild West, the companies, average of 10 years. Many companies in London have probably not been there 10 years. And many of them have definitely not been here around 100 years. But these have super high upside and super high risk. These are the Moonshoot coins and the Moonshoot tokens. So that brings us finally on to what's the most popular monetary asset in the world and how does it relate to crypto? Well, the most popular monetary assets are US dollar, euro, and of course, Bitcoin. But out of these, the only one that will go up in value as more money is printed, and you know this has been happening a lot all around the world due to coronavirus, is Bitcoin. But looking at other scarce assets like Apple, Google, other cryptos, these are less popular. So I would look at Bitcoin as the most distributed, strongest brand of monetary asset there is. And this is why it is favoursome amongst big institutional and heavy investors. So if you were going to bet on a sovereign store of value, it would not be the dollar or the euro, it would be Bitcoin for sure, if we're just looking at distribution. Now, there are a lot more factors to this, of course, to take into consideration, but this comes to the fundamentals. This is about as close as you get to seeing how the digital and crypto world works from a high level investment view. So there you have it. And it's just carrying on quickly with that overview of how the crypto market is invested in. That is how you split your portfolio up. So now it becomes more apparent why the top investors split their portfolios into 50% into the more stable projects, 25% into the more high rollers, high risk, high reward projects, and 25% into them stable coins that are, in my opinion, not really any value of anything unless you're using them to buy the dip or stake them. So with all that being said, I hope you enjoyed this video. I hope you gained a lot from it and it helps you out. But if you want to help me out a little bit too, don't forget to subscribe, hit that like button and tickle that bell notification, and trade smart, trade safe, and don't get wrecked.